Hey everyone, welcome back to another Stock Market Open Live. Take a look at this bounce on Bitcoin. We've got almost a perfect bounce at 57,580 right here on a 30-minute candle. And this initially was looking a little bearish for the markets this week, but nice bounce here. Unsure if it's because now we've got futures green as to why Bitcoin is up, or vice versa. Bitcoin up, futures green. Either way, looks like things are somewhat trying to rotate up into the open. And it's a big week for catalysts. You probably are already aware of PPI, CPI, retail sales, import prices, University of Michigan. And we also know that we have Walmart earnings this week, a little bit of a tell into the consumer as well. So getting retail sales looking backwards for July, but then also Walmart tell us a little bit about the pressures consumers might be seeing going forward. Are they overblown or are they real? We'll find out. So all of that and more this week. So it'll be kind of wild. Today will actually probably be the quietest out of all of the days. I mean, you get Monday.com reports earnings, and that's pretty much it. Yeah, you do get New York Fed 1 year inflation expectations that comes out at about 8 a.m. California time. But other than that, very, very, very chill day today. So nobody's really expecting anything crazy today. You've got gold up about 33 bips, copper's up a little bit, silver's up a little bit, both of those up over 1%. Oil's up, Brent roughly 1% there. Some oil cuts, production cuts in Saudi Arabia. You've got pretty much flat 10-year Treasury yield down 1 basis point, 2-year Treasury yield sitting at down half of 1 basis point. So basically no movement over here. And then pre-market indices green, Dow, S&P, Nas all green. Let's take a look at IWM. How are those small caps doing? Yep, they're lagging a little bit. Small caps are moving the slowest, but they're trying to move right now, trying to turn green here. Knocking on the door, 60K for Bitcoin. Get about 6 basis points there on Tesla, 42 on Nas. It's sort of been bouncing around, and we'll get to see will we keep seeing movement up on Apple, on chip plays. Disney's got 8 basis points of green. You're sitting between the two trading lines I've seen for Nvidia, 108.08 and 101.02. Two big trading lines here for Nvidia. And look at this, back to almost $100 on the trade desk. Really impressive. With Robinhood sitting at just about over 18 buckaroos. So let's see what. Oh, audio. Oh, oops. Oh. Okay. Well, y'all have had bad audio. Sorry for a while. There. That'll be a lot better. I hate how it defaults to that sometimes. It's very annoying, especially since we always use the same mic. That happens maybe, what, once every 2 weeks or so, I feel like? Oh, well, it's solved. So, anyway, I'm sure you, even though the quality may not have been as good, you were able to hear the breakdown so far. Next, we've got, let's see here. Yep, U.S. traders brace for big week on data. We talked about that. Let me see here if there's anything else that we potentially missed. Let's see here. Talk about how last week the carry trade issue was a technical meltdown, not a sign of stock market doom, they say. This is per B of A and Bloomberg analysis. Robust profits, no reason for complacency though. So some talk about future growth rates here. New week brings focus on inflation, but don't forget growth. Yep, exactly. U.S. recession risk. Europe and UK recession risk tail in pricing of recession risk versus the United States. So let me see this. The rates market implied odds of a U.S. recession look too high relative to that of what's priced in Europe and the UK. Oh, I see. Okay, in other words, the market maybe here pricing in more of a potential recession than in the UK and Europe, whereas they think maybe those areas should be pricing in a recession more so than we are. That's a fair argument. All right, let's listen in briefly over here. Let's see what commentary they got.
Could lose her the election if she doesn't come out and embrace it. Look, Trump was all for the not taxing tips. Now she's all for. Do you think she will ultimately embrace crypto as an industry?
I predict her verbiage will. And I do think that part of the reason why is you see Trump's speech at the Bitcoin conference. It's just a matter of competing for votes that she's going to adopt a thoughtful position. Now, speaking as an American.
Vivek's basically making the argument that because somebody like Harris is just going to, I mean, this was trending over the weekend. Copycat Harris is like, oh, okay, no tax on tips. That's popular. Okay, yeah, we'll do that too. Kind of interesting and very, very interesting strategy there to pull that off by the Harris camp. But anyway, he's basically making the same argument here on crypto.
I think Gary Gensler should continue as the leader of the SEC. So I think those specifics are going to matter a lot, Kelly.
For sure, but is what you're saying is just a general position of openness is probably all the industry really is looking for. This idea that it's not a partisan issue, that Republicans are for it and Democrats are against it.
It should not be a partisan issue. Now, what I think you are seeing is this tendency to really embrace whatever wins her the most votes. But when you're looking at your question, Andrew, of how do you assess the seriousness of that, the metric to use is how specific she actually gets on those policy proposals. It's one thing to say, I favor private health insurance now. Right. Well, then the question to ask is, why were you on the Democratic debate stage when they asked the question, would you favor abolishing, that was their words, abolishing private health insurance?
Right. And she said
why
yes.
did you put your hand up? You then raise the bar for the specifics you have to offer for exactly.
Yeah, okay, this is getting too just into politics over here. And you'll find that it seems like when they're boring, I always like to say boring stock news days lead everybody to talk about politics, which I get it. But yeah, it's not the most entertaining. Well, I mean, who knows? Some might say it's more entertaining. But yeah, it gets a little wild. So anyway, with that, let's see. Boy, it's crazy there how many Bitcoin scams always pop up in the comments. We always have to try to, especially Facebook. But there we go. I'm able to solve that generally pretty quickly. It's scams everywhere. It's always Bitcoin too. Well, the whole untraceability of it. Although theoretically it's more traceable than other things. You just have to know who has what wallet address. It get a little complicated. But anyway, so next stop really is getting through this week. I think that's going to be key. Usually you see markets sell down going into news weeks like this, mostly because there's uncertainty, right? You go into PPI tomorrow. It just wouldn't be a surprise to see markets not rally today, but they might anyway. So it's usually the first 5 minutes is a good tell as to what's going to happen on the day. But that's historically what we've frequently seen. And then really I'm curious to see how much are markets going to actually care about inflation this week versus retail sales. Retail sales on Thursday. So towards the end of the week, you'll have a little bit of patience required to get there, so to speak. But we shall see. So let's see what else we have. We've got BTC. Let's say at the 1 minute over here for a moment. Yeah, right there at 60. Twice basically got rejected at 60. That's all right. Plenty of time once the market actually opens to make some moves. And let's try. Okay, no, they're talking politics. Everybody's just talking politics today. Politics on Fox, politics on CNBC. The Fed being behind the curve. Let's listen in over here.
Neil Dutta of Renmax says that they're playing with fire, that hires slow before layoffs, and using layoffs as a crutch is unwise. What do you make of that, Laura?
I think he's really, and this is an important point, because the unemployment rate moves asymmetrically. By that I mean it goes down really slowly and it shoots up. And we do have a really, I think, scary history of this asymmetric response in the unemployment rate. But if we're going to be all in on the soft landing, and we don't have to be, I think landings are bumpy, and that's one thing that we're experiencing in markets. We need to watch the unemployment rate like a hawk, and we need to really be, if it gets to 4.5, if it starts to move in 0.2% increments every month, I think that's a situation where the Fed does cut significantly. But this is an important tipping point, and I think you look back to the one case where we didn't have a recession when the Fed cut rates, the mid-1990s, you did see the unemployment rate kind of move up a little bit and then stop. But it's a tricky time. I would agree with that.
Well, where we are right now in the unemployment rate at 4.3% is roughly where the Fed wants to see us at the end of the year. So where do you think the unemployment rate will be at the end of 2024?
I think we're going to be about here, around 4.25. And again, this is
I do wonder, will 4.25 actually make a difference? That's the struggle. I really struggle to think about this. People say, okay, the consumer is weakening today, right? Well, what happens when you get, a year from now, rates are at 4.25, and it's still expensive to pay your credit card, to buy groceries, to buy a car. I don't know. It's gonna be wild.
And when we talk about the need for investors to widen, I would absolutely agree with that. It's even beyond traditional markets, because what we're seeing today is, I think, good for the economy and good for productivity growth, but for publicly traded markets, it's a challenge.
Just to sort of finish up, looking ahead to this week, what do you think is going to be the most compelling data point or earnings release that could shape your view going forward?
I think CPI is going to be important. I think retail sales are going to be important. The CPI numbers, markets are really just looking to check the box on the Fed, putting that rate cut into place. I expect it to be another friendly report. We're going to see a lot of volatility. Just the next quarter, brace for that, because Fed policy expectations are going to swing around. I'm still only looking for a 1/4 point cut, but you roll right from that into the elections, where we know the volatility picks up in the 2 months before an election hits.
Laura Raymond, FS Investments, thank you so much for being with us. Joining us now, someone with a call on what's going to happen with the euro, Jane Foley of Rabobank. Jane, you actually recently changed your view on the euro to actually increase it, seeing a likelihood of 110 rather than 105 previously versus the dollar, because not euro strength, but dollar weakness. Just pairing this with what we were hearing from Laura, Jane, how much do you see this hinged from U.S. weakness versus just simply rate cuts that might be beyond what people expected?
Well, there's obviously a lot of different stories interlapping into the euro-dollar story. But I think if we go back to the start of the year, we'd always had the view that the dollar would weaken towards the end of the year, because that's when we were
when rate cuts start. But what's fascinating is, this idea of pricing in September. It's been bobbing around. We've been at right around 1. Then last Monday, we ran up to like 1.8 cuts. Now we're sitting at 1.5 cuts. So the market is like 50-50 on, is it 25 or 50? Based on what I'm hearing from, Fed commentary, you'd have to have like some rug pull to get a 50. They're going to go slow. So I expect a 2.5. But, who knows? We'll see. We still got J-Hole coming up. That's another one. Jackson Hole. Actually, that's in about, let's see here. The Economic Jackson Hole Symposium. That is the 22nd to 24th. So in 10 to 12 days. And what's really wild is what is going to happen with Israel and Iran between now and then. Are we going to be listening to J Powell at Jackson Hole with another war going on? Or was it all for nothing? I don't know. I hope it's not another war. It's just bad for the world. Let's listen in.
The market has to still settle down in terms of the views on the Fed. I think the market was far too excited a week ago in pricing in too many Fed interest rate cuts.
Yeah.
The data this week clearly in terms of the US economy is going to be really imperative of giving the market a lot more balance in terms of what is really realistic from the Fed. And at the same time, well, yes, maybe the Bank of Japan can hike interest rates again, but maybe that won't be till the start of next year. So from that point of view, I think a lot of the really extreme positions, and there was a lot of them, have been washed out right now. And I think maybe dollar yen can settle out, maybe still relatively volatile, but nothing like what we've seen. So maybe 145, 147, that sort of trading band until we get more data to really clarify what the fundamentals are suggesting for that currency pair.
Jane, is there some degree where just the carry trade isn't attractive now, that it's linked to low volatility? And if we're entering a summer that's already been volatile, if we're entering a period of politics, and as you mentioned, the uncertainty over the Fed, that even when trades do unwind, they won't be put back on?
Yeah, I mean, you are right there, because one of the reasons that the carry trade has been so popular in FX this year has been because volatility has been, really very low. So if you enter into an environment with higher volatility, high news events.
Yeah, in low vol, it makes more sense to take this sort of risk because you don't have to unwind. You get a high vol environment right before an election. Increases the need to potentially protect yourself and either pre-liquidate or post-liquidate, But well, whatever. So, this week is the big tell. Well, one of them. This week will give the Fed a lot of data going into J-hole. So, that sort of amplifies this week because whatever data we get this week is really the data that J-Pow is going to get to talk about at J-hole. And then we're still 5 weeks away from the next Fed meeting. So we got some time to go. It's kind of tough to be so patient, but it's one of the most important things in investing is patience. Patience, good sir. All right, so what else? Let's see here. Let's see. Carry trade blow up haunts markets, raises alarms over leverage. Well, as it should. I mean, it's always good to have a little leverage wake-up call. Somebody says inflation risk is in danger of being forgotten. Yeah, I believe that. I think markets have kind of sort of written it off, which does create more of a risk, I suppose, of an upside surprise in inflation, which I don't think is going to happen. But yeah, I guess markets would probably be more flat-footed for an inflation surprise to the upside rather than the downside. Like, I wouldn't be surprised to see if the expectation is 1.9 on CPI core month over month, that we get something that's like 1.0 or even 0, and that'll probably all be good for the market. I don't know how many are prepared for a potentially hotter number. I also don't see why we would have a hotter number, but that's, I suppose, that's always the challenging thing in in trades. Apple Cash tops peers as they spend on AI data. Yeah. The outlook for growth in Apple's free cash flow is likely to improve in 24-25, says Doomberg, setting the smartphone maker apart as Microsoft and Amazon Web Services invest heavily. Our analysis suggests Apple's free cash flow of $112 billion or 6 to 8% in Cal 25 versus Microsoft, which may only grow at 1 to 3% next year. Apple's cash flow could be dented in 26 if search payments from Google are affected. Okay. Yeah, there was somebody who said it well. It's I can't remember who it was, but basically these larger companies, they, even if it doesn't make sense now to spend as much money on AI as they do, they have to. They have no choice, basically. I thought that was very interesting. Let's see. All right, let's go find out what else we have. Okay. Oh yeah, here's the OPEC demand trim talk.
And Paris over the Olympic baton to Los Angeles.
No, won't tab off that. There we go. No, I don't know. Was it? Oh yeah, you might be right. It was Lisa Su. Yeah, you're right. So they have no choice. That's what it was. You're right. And it was Mark Zuck who suggested it's going to take longer to actually realize profitability from it. That they have a history of profitless, sort of projects for a while. Then you had Airbnb suggest it's going to take a while for AI to really change the game in docs. Yeah, in apps rather. It's very interesting. Yeah, you're right. It was Lisa. Okay, let's see here. This is politics, so let's hope for no politics over here.
That the channel owner typically wins because they have that relationship with the consumer via putting the ads out there and telling everybody, if you love CNN, you're not going to get CNN. I think CNN is a big one here. It's owned by Warner Discovery. It's part of this package. And they could say, what happens if another, major news event happens? You want to at least have CNN. And the question is, how much Comcast is willing to...
Boring. Okay, so let's go take a look at some other stuff. Let's get away from this. Let's see if we can go learn something else. Because so far, what the MSM has is quite boring today. So let's instead go see what Mike Wilson helped contribute to over here at the Morgan stands, at the stand of the morgues. All right, so AI transcript mentions in earnings calls, all-time highs, alongside efficiency. Yeah, so operational efficiency, when this stuff gets extreme, I always wonder if you're going to get more of a recessionary hit. You kind of saw this recessionary, this trend up in efficiency right here, and it somewhat seems like you're getting that, although to a lesser slope over there. So corporate mentions of inflation stabilizing. Yeah, that could also be a concern, like, a Bowman has this concern that inflation will stabilize too high. Labor in focus as mentions of hiring tick lower. These are all sort of like put-togethers of earnings calls, right? What are businesses in aggregate talking about? Let's see here. What else? Consumer weakness versus strength. Buybacks. Actually, a little elevated there. AI mentions. Saw that. Cautious, but green shoots. Green shoots reached new high. Look at that. That's pretty cool. Oops. Let's draw that like that. There we go. Cautious. Somewhat normal over there. Consumer weakness. That reached a little bit of a new pop. I always wonder if this is sort of like the sales line. It's like, oh yeah, things are going bad, but we see green shoots. Because I've seen companies, like, the follow through matters so much on this. I can't remember which company it was, but I was reading an earnings call, and one analyst, I'll put anecdote down. Anecdotes. There we go. One analyst says, hey, last quarter you said you saw green shoots. And then the CEO responds, yeah, those didn't pan out the way we thought they would. So I don't know how useful that is. Again, that's just an anecdote, but this is some of the kind of stuff that you see. Okay, let me try something different. A little boring there, but sometimes I like looking at those. It's sometimes I feel like a little hard to really understand their what's it called, takeaways with those random mentions. Let's see. 2024 Olympics are coming to a close Sunday. U.S. was leading with 111 medals, tied with China for the most gold medals, 33. Let's see here. Adopters are still adopting AI. Okay. What else? Investors navigating market extremes. Yes. How many days now are we away from the election? It's got to be like 90 something. Countdown. Let's see here. 84 days left. Wow. Oh, is the 5-year break even under 2 for the first? Yeah. See, I really don't think markets are pricing in inflation at all right now. And I agree with that. I'm not worried about inflation. I'm more worried about the Fed being so hyper worried about inflation that they're going to be late. Wow, yeah. 5-year break even is under 2. You're right. That's really cool. Great observation. Markets are taking a little bit more of a pessimistic view on growth. Well, yeah, as they should, going into the election. Walmart coming out this week. Coca-Cola. Mike Wilson likes them as a defensive. All right, this is a little boring. Let's see if Goldman has anything for us. Not really. Risk relaxation. Rates volatility could persist even as liquidity conditions normalize. Okay. Fine. How about JP? Ooh. Let's try that. Let's take a peek at this one. APAC stocks mostly higher after Friday's gains. Light macro news over the weekend. Yeah, like none. Other than Israel. Israel was really the macro news over the weekend. You've got the Trump-Musk interview tonight. PPI, CPI, retail sales. Two key prints can affect the macro narrative this week are CPI and retail sales. Upside surprise in CPI can bring back memories of higher for longer. Yeah, I agree. Hence the downside surprise in retail sales. Heightened sensitivity. Yeah. For some reason, markets will also retain heightened sensitivity to claims on Thursday. You know, this is just like a joke. Unemployment claims are so lagging. The fact that we had such a move on markets yesterday really was indicative of markets that just wanted to move on something. You know, it's like you had money sitting on the side and people are like, we need to deploy this. Oh, unemployment claims are good. Okay, deploy. That's kind of what it felt like on Thursday. Let's see here. Yeah, JP Morgan's also looking for 0.2% on headline. Month over month, they're looking at 0.17. Broadly consistent with cooling inflation. Looking for further moderation in medical care prices. Owner's equivalent rents. Yeah, they don't actually see really anything pretty hot here. Used vehicles negative. New vehicles negative. Public transportation negative. We project retail sales rose 0.4% in July. That would be better than expected. The report should otherwise be moderately weak, with sales excluding autos and gas down 0.1. That's their expectation. Okay. Feels quiet on the earnings front. We're watching Home Depot and Walmart this week, as they might have clues on the consumer. It's true. Let me see what date those are. I think Walmart is Thursday, and Monday.com was today, along with Barrett Gold. Monday.com sees Monday.com beat. Monday.com better EPS in Q2 than expected, better revenue than expected, and for the fiscal year they raised guidance, and for Q3 they raised revenue guide. Pretty good. Let's take a look at that. Let's see, Monday.com. Oh yeah, it's up like 9% right now. Look at this. So give it a little bit of a zoom out over here. Nice little pop up. So it looks like you're going to get to about 247. Oh, it'll put you back to kind of the previous ceiling where you were. So on a technical basis there. Okay, so that's Monday. Really no earnings afterwards. You do have Rumble. Tomorrow morning you'll get Home Depot. Quantum, Thursday afternoon. So really tomorrow morning will be interesting. Workhorse, wow, who remembers them? That'll be Wednesday morning. Canoe, Wednesday afternoon. Cisco, Wednesday afternoon. Alibaba, Walmart, JD, John Deere. That's a big one. That's all the morning of Thursday. Thursday's probably the big day. It's probably the big day. Yeah. So, because then you'll already have the PPI, CPI data. You'll have some consumer earnings reports and retail sales. And you should be, like, you should know, is Iran going to do anything? So, this is going to be a wild week. Unlike last week, which was somewhat boring. With the exception of the beginning of the week, because of the Japan carry trade. But in terms of catalysts, there weren't that many caddies. I like caddies. All right. So, Qs are trying to hold on to some pre-market gains here of about a third. Tesla's down about 8 basis points. And Bitcoin's really trying to figure out where to go. Keeps getting rejected at 60K. So, we'll find out, I suppose. Okay. What else? Alright. Let's see what they're going to open with.
Of course, with these markets this morning, after a volatile week for stocks last week, we all know this time last week we were looking sharply down on those futures. We were all becoming more familiar with the yen carry trade and what the impact of that was. We started to hear a lot of discussion of recession, and here we are a week later after what was a volatile week, though certainly ended on better terms, so to speak, for the bulls than it did as the week began.
Well, I think you really just caught it. We didn't know the yen carry trade, and so when the market went down, we first initially thought, well, maybe it's rates, then we thought maybe it's earnings, and then we realized it's an unwind. And once it became an unwind, I think people decided to use it, for the most part, as an opportunity, except for the companies, of course, that did not report good earnings.
And any different in terms of sort of how you see things playing out? Obviously,
no, I do think
these
it's
are
different.
long weeks, so to speak. In August, the liquidity is not what it typically is, or at least it can be. So we do see sometimes through the years more volatility in this month.
Well, I think that people are looking at what went down that shouldn't have. Still, apropos of the KeyBank acquisition, the banks themselves really did not fare well after Japan. Even though they had good quarters, it's almost like
I saw a funny comment on X. I think it was Friday or something like that. But somebody said, there might have been that Greg guy. But anyway, somebody says, my only wish for my funeral is that Jim Cramer could be the one to lower me into my grave. That way he could let me down one last time. That's so bad. Oh.
And the Dell might be bloated. Thank you, Ben Righteous from Melius. And as far as we're concerned, anything connected to the data center is a sell. And that was the overwhelming theme, even after the yen carry trade smoke cleared.
Right. And that, by the way, that was the theme going into the yen carry trade.
Yes. So it accentuated what was happening, except for the banks, which were doing very well until this.
And the banks is what? Banks was what? Credit quality? I mean, I find that a little
I think
hard
we made
to imagine.
up. We had to come up with a reason. No, because it wasn't credit quality. It's actually quite good. And by the way, Dave, one of the themes that no one seems to want to talk about, no one wants to stick their neck out.
Yeah.
Commercial real estate. Albatross to opportunity, somehow. Depends on the city. I mean, obviously, every day they can gin up an anti-San Francisco.
Cali, go buy everything in California. If only there was a startup doing it. All right, let's take a look at Bank BOFA. Key takeaways. Aggregate credit card and... Oh, I messed this up. Hold on a sec. And... press the button. There we go. There we go. Aggregate credit card and debit card spending per household fell 0.4% year over year in July. Ah, interesting. Okay, so that somewhat suggests this is suggestive of a retail sales miss in July. Thursday. So this is B of A's data. Services stronger than goods. International travel remained a highlight. Consumers flocking to Paris Olympics and Taylor Swift concerts. Labor market is showing more signs of cooling, but for now, Bank of America internal data on after-tax wages and salaries remains supportive of consumer spending. Households have managed to eke out some volume growth. Consumers are being more price sensitive. This makes sense. Stronger spending in value groceries and clothing. That's interesting. Mike Wilson mentioned that about clothing as well. Mike Wilson mentioned clothing and shoes as well. One reason for price sensitivity may be the diminished savings buffers that consumers have, especially after allowing for inflation. Yeah, no kidding. Credit card and debit card spending per household decreased 0.4% year over year in July. Really bobbing around zero there. Services spending continues to have a stronger momentum. Okay. Summer travel season appears to be providing momentum to consumer spending and internationally. Well, not going forward is the question, though, because mostly based off the earnings calls that we're seeing. Q2 was good. Q3 was a disaster. Let's see here. Slight uptick in those receiving unemployment benefits. No obvious signs of surge in joblessness. This is true. You don't have like a rush of layoffs yet, right? So this rush of layoffs usually happens a bit into a recession. You know, once everybody's like, oh my gosh, we're in a recession. I think it's worth looking at that. So let's go to unemployment rates. Let's go take a look at it together. So here's the unemployment rate. And I always like to get COVID out of there. And then we can kind of zoom down. So let's zoom in to a smaller window here. There we go. All right, so you can see the unemployment rate here. You were technically in recession in December of 2007. The unemployment rate really didn't take off until the summer before Lehman Brothers collapsed. And then it just really took off after the Lehman Brothers collapse. So that was halfway through recession. In 2000, in the dot-com bubble, layoffs slowly moved up in 2001, but they didn't really surge until the second half of 2001, also halfway through the recession. In 91, layoffs went up going into the recession, but didn't surge until halfway through. 82 and 80 you were about halfway through, 74 halfway through, but 82 and 70 you sort of had this just straight up from the beginning of the recession to the end of the recession. So it seems to me that you're either not heading into a recession, which I guess where has there been a time where the unemployment rate has gone up and you haven't had the recession, right? Here you're coming out of recession. I was going to look for the mid-90s, but you didn't actually, I mean, you had a little bit of an increase here. You went from 5.4 to 5.8 for a moment there. That's it. And yeah, you don't really have the unemployment rate rise without a recession. Oh, there you go. What's that? Oh, but this was the double dip recession over here. So this was confusing because you had the Somme rule triggered in 56, which then led to this recession. the Fed had cut rates dramatically, but then they jacked up rates in 59, which led unemployment to pop again, and you did get another recession. You know, certainly within a year here, you were in another recession. So, you know, that's the only one where you see sort of the spike that's not in a gray bar there of a good chunk. That's only 0.4. Yeah, that's pretty nominal as well. Because the reason the SOM rule is triggered is because we're up, you know, over 0.5 over the 12-month moving average. So it's suggesting some beginning velocity here. Be really interesting. Oh, I guess you can't really see that part. There you go. Very interesting. Ay. Can confirm I got laid off as an IT director 2 weeks ago. Ouch. Yeah, good luck getting another job. Sorry to hear that. Thank you for being a new member here. It sucks. Getting laid off sucks. You know, you try your best for a company and then the economy shifts or whatever, and it's so not your fault. Cody, $1.99 here. Thank you. Let's see here. Golden statue of Powell. Oh yeah, the death cross on BTC. I mean, I don't actually think it's extremely predictive on BTC. I mean, I've looked at it. I didn't find it to be very useful. Somebody says comparing Jim Cramer to the Grim Reaper. Oh, yeah. Some rule triggered in triggering before 2019 is just back testing, which is not as accurate as real time. Well, I mean, what's the difference? Right? I mean, I guess you could argue that data could be revised, right? You could revise away. That would be the only difference, would be revisions. So technically, the rule would get triggered whether you back tested it or you were using it as a leading tool. That doesn't matter. The only thing that would matter would be a revision. So if you revise away the joblessness, sure, but unfortunately, the opposite has been happening. We've been revising in more joblessness. So it actually would accelerate the potential of the SOM rule. So, I mean, we'll see. I mean, nobody knows, but it seems like the trend is the opposite of revising it away. So I think we were getting somewhere around twice as many negative revisions as is typical. At least twice as many. Okay, labor market. Wage growth should continue to underpin the consumer for some time, but the impact of any sustained or accelerated weakening in the labor market could in time be reflected in wages with implications for spending, of course. Consumers squeezing volume from declining growth spending. Slower labor market is in some respects the normalization that the Federal Reserve has been looking for. Inflation rate has declined. Yes, it has. Largely a slowdown in card spending has largely tracked the decline in inflation. Well, that's an interesting idea. We'll see if that ends up being true. Let's see here. Value in groceries, clothing. Why are consumers trading down? It's all about balance. Okay. Pretty boring. It's methodology update. Okay, yeah. Well. All right. Back to Jimbo for a moment here. Actually, let's take a peek at this first. What's moving here? So Monday.com's moving after earnings, although very, very low liquidity there. Pre-market at least. You've got small caps are up 0.08, so flat basically. Tesla's basically flat. The Qs are softening a little bit going into the open. Enphase slightly negative. Apple's only got 18 basis points left. Look at that rejection. If you don't have a line drawn there, you might want to draw that one. Look at that, a double rejection of the pre-market here at 217.23. And you know me, I didn't just add the line either. So, doesn't mean they're perfect, but I think they're useful observations. Nvidia is probably trying to get to 108.08. I mean, I don't know that with certainty anything can happen, but it's just an observation in terms of the trend right now. Vertiv, Dell, Airbnb, Redfin, Matterport. Just see if there's anything else that's moving big here. Embraer, $32. That's hot. What else? Broadcom, 50 bips. Yeah. No. Okay. All right. Slight positive now on Tesla. All right. What else? You got the yen declining again, which is actually a good thing for limiting that risk of that sort of carry trade explosion. See that right over here. This was where we had this disaster right here, this peak, and actually declining here recently. Go to the 5-day, you can really see that drop. It's about to be 0.0067. Too many decimals over here. If you want to see this a little bit more easily, just do USD to JPY. And then you could track the number a little bit more clearly. And that could be useful. You can go 5-day. And obviously inverts it. In this case, you have the dollar strengthening, basically. But it shows you where that hole was at about 144. And how we're moving away from that now. Add some more decimal places, basically. Somebody says, rate cuts seem to be a coin flip. Markets seem pretty confident right now. I think 50 or 25 seems to be a coin flip based on what the market's pricing. Based on futures, right? But futures are pretty much guaranteeing you a 25 bip hizzle. John Deere just laid off a ton of IT. From what I hear, it sounded like they're bleeding. Yeah, I mean, I think John Deere is an interesting one. I think you had a lot of people buy new equipment during COVID, and when interest rates dropped to zero. And like, how often do you need a new John Deere tractor? And these things, I mean, I hate to say it, but they're built pretty well.
This morning, of course, the stock Jim and I have discussed a great deal. What I can share at this point, I mean, there was a story over the weekend or on Friday that Starboard, obviously an activist we all know well, has taken a stake there. Doesn't appear, based at least on what I've been able to understand at this point, that there's necessarily a story around that at this point. Activists do occasionally just own stocks, and they kind of wait and see. And maybe they will do something at some point, but they very well may not. And that certainly seems to be the case here in terms of what's been reported by the Journal with Starboard owning a stake there. The focus that we've had and that continues to be the case, I think, for the market, rightly so, is on Elliott and the significant ownership stake that company or that fund has in Starbucks and what it is trying to accomplish, namely, from what I certainly understand, and I think you do, getting somebody, if not one or more directors on the board. What I've heard most often is Jesse Cohn, who runs the activist practice at Elliott for some time, being proposed as a director, some back and forth around that. But perhaps, Jim, we do get a settlement near term that does involve Mr. Cohn joining the board. Again, can't say that with certainty, but certainly something that I've been hearing any number of times as a real possibility.
You and I know him. I know him by reputation. You know him.
I do know Jesse, yeah.
If he got on the board, it would be meaningful. Because I look at the board, and the board is made up of really busy people who, and I mean busy not in a negative way. I mean like people who are focused on other aspects. I mean, look, Satya had to leave it because it doesn't have time.
Yes, Satya Nadella stepped off the board. This would be essentially replacing his place on the board.
So if this man went on the board, it would actually be of some significance because I think the problem, David, is operational. I think that they have a three-pronged plan that Luxman has, and I don't think people.
What do y'all think about Starbucks? I noticed they've in more, and you see this on the internet too, but I see it in person. A lot fewer chairs in their stores. It kind of feels a little bit, and I hate to say it, but it feels like they're sort of getting rid of what made Starbucks. You know, it used to be that Starbucks was your home away from home, you know, your office away from home, and it kind of feels like they got rid of that a little bit. So I'm a little, I don't know how to put it, a little surprised, you know, but it's kind of sad, and I think that's kind of hurting them. I also think something that Universal does that Disney really should step up on is Universal lets you do those unlimited express passes, and Disney doesn't do that. I mean, you have to go for like a pretty expensive VIP experience to pull it off, but like they should have more expensive options for skipping the lines. It seems like it would be a very simple way to make some additional tendies, but you know, whatever. So simple stuff, but obviously, I mean, I'm sure they don't need to hear it from me. I'm sure somebody's told them that.
Constellation, where they put on one guy.
Yep.
And the problem is they got in there and said, well, geez, our guy.
Oh, focuses on walk up and drive through. Yeah, but I mean I get it because you turn more volume. But, you know, there was always this magic to, like, walking into a Starbucks and there were a bunch of people on laptops hanging out, right? Like, you could still have walk up and drive through then. Starbucks has become coffee fast food. Yeah, probably right. Go in there and get your... I mean, don't get me wrong, the little pastry things they do, the... what are those things called? Like the croissant, ham and bacon, and egg and cheese sandwiches. They're good. You know, as long as they're not too hot and you burn yourself on them. Pretty good. But the coffee itself, I'm not the biggest fan of Starbucks coffee, yet I still buy it. It's almost like, I was joking with Lauren about this yesterday, I'm like, you know, the thing about Starbucks is they're just consistent. They're consistently bad with coffee, but they're consistent. So, I thought that was pretty funny. Somebody, they opened a drive-through only store in your area. Well, that might be because you're getting, like, the Dutch Bros are doing that model, right? Yeah, they're trying to compete maybe with the Dutch Bros. That's an interesting point.
You can't take it so hard.
Well, I take it personally.
I know you do, but that's really not easy.
Well, it's everything we have.
All right, well, what else we have is a mad dash coming up, and so Jim's going to get ready for that. We've got a few movers we want to get to this morning. Let's give you another look at futures. We are set up for a higher open here on this August Monday morning. Don't go anywhere.
Oh, watch me go somewhere. All right. So what do we got? Tesla, it's bobbing around flat. Nothing really going on here. Upstart, you know, had some crazy run last week. It's coming down a little bit. You know, BTC is just going a little bearish here. Not much, but, you know, it almost feels like you got sort of like this triple top over here on the minute chart. The 30-minute chart did indicate that, hey, you know, maybe we're going to have that chance to get to that 60,700 level, but the trend has been towards that 57.5 over the weekend. In fact, we perfectly bounced there over the night, over the evening here. So, you know, the technicals have been in play here. Where we go now, we shall see. We shall see. Let's see. What else? Yeah, not a lot of big movers. I mean, you got Monday.com moving on earnings, but otherwise, I think everybody's just sort of like, all right, let's wait for the bell and let's see which way everything goes. Wouldn't surprise me. So, well, Ubiquity's up a little. There's a firm. Yeah. So, what do we got?
Recovery.
Oops. I accidentally pushed those buttons. Doomers are not there. They're on commercial. Losers. And let's go find something else. Hold on a sec. Change this. No. There we go. All right, let's try both Mizuho. Let's see what they have for us today. Weekly outlook. Ooh. Oh, that's boring. How about this? Nope. Never mind. Okay. Barclays. Let's see if they have some juice for us. Let's see. I don't think so. Nope. Well, fine then. Alright. Well. Oh, this could be interesting. Let's see what this is. Volatility piece. Alright, let's look at the volatility. Usually goes up into elections. Let's see what they're yapping about. Cusp of Fed easing upon us. Lack of market depth has exacerbated moves. Geopolitical risk could also participate in another asset price gap. Yeah. Well, I mean, we'll see what happens with Israel this week. For the most part, inflation is falling, but still above target for accelerated cuts, as long as we're not shedding jobs. Hence the focus on labor statistics. Yep. Well, all right. JetBlue downgraded. I mean, I feel bad for the airlines right now. It's getting whacked. Absolutely whacked. I had some puts on JetBlue. I think it was last week or the week before that. Oh, man. Maybe I should have waited for the downgrade. Down 9% now in pre-market. Dang it. Yeah, I shorted these suckers at like $7. Now they're at $5.45. I mean, I took some money. Daniel. But also, like, sometimes you get a downgrade and the stocks move like zero. So you just can't know.
Issues. And it's interesting to me that JetBlue is one of those companies that are backing their bonds by something somewhat esoteric, those loyalty programs this time around.
Yeah, very interesting. I love that function. DDIS Go shows you the debt distribution. Oh, there it is. And when those debts...
Oh, I haven't heard of that one. DMMD, I'll have to check it out.
Behugana explains why she's comfortable being overweight equities after the volatility last week.
Countdown to the opening.
Yeah, the Trump interview is later today. We'll cover that. That should be pretty entertaining. Looks like you're getting a little bit of a move up at the moment. Tesla's still flat. Apple's trying to go negative. But the Qs, yeah, a little slight move up over there. Led by likely NVIDIA. NVIDIA just had a little bit of a pop. NVIDIA. So, all right. Oh, you got 3 minutes to go until the opening bell. And the question is, who wants to be a millionaire? So, anyway. All right, so let's see here. Volume. Yes, my lord. All right. Iran was waiting for the Olympics to pass. Somebody says, I'm predicting that war from Iran is priced in. Wow. Yeah, nobody knows how small or big that's going to be. You don't want it to expand. Very interesting. Oh, well. We shall see. All right. Let's make sure this is working. Should be. Yep, there we go. And here we go. We're 1 minute away now. A little bit of, yeah, just had some red candles here just a minute before the bell. You had NVIDIA got some red candles there. Tesla got a big red candle right before the open there. And IWM is about to go to 0. It looks like the Qs had a little drop there as well. That's weird. All right. Here we go. Oh boy. Good luck, everyone.
Long PP.
Pricing power. Everybody loves pricing power.
We'll get back to the food group a bit. Let's get the opening bell here. Take a look at the real-time exchange. CNBC, perhaps a bit more green on that board here, doing the honors. The Texas Pacific Land Corporation celebrating its 136th listing anniversary. It's a good time. Over at the NASDAQ International Youth Foundation that connects young people to educational and employment opportunities around the globe. You mentioned food.
All right, that's like 50-50. That was not a lot of applause they had there. That was pretty quiet. Looks like Tesla is dropping. You have a lot of data this week, so the only explanation I could really give for like red coming here, I mean, no, Nvidia's skyrocketing. Look at that. Nvidia's trying to go for 108.08. And that doesn't surprise me. That's a pretty common line that it likes going to, 108.08. And the Q's coming right back. Look at that. That's pretty rapid recovery there on the Q's. Then you've got, is it gonna hold though? Yeah, Tesla bleeding quite a chunk there. What is this? Q is trying to figure out a direction. Apps go negative. Still, oh, look at that. It just got up to almost 108 there on NVIDIA. IWM, large red candle. Good Lord. Oh, where that just came from. Tesla's now down 1.2. See, the pre-market, this is like the opposite of what we saw in the pre-market. BTC giving up a little bit. Palantir is actually holding on to about 1.3 right now. That's pretty good, Palantir. Good job. It could just be the first 5 minutes of vol here. Getting to the 197 line on Tesla. And let's see if Apple, which is trying to run, can break that 217. I don't know. And I make these observations. Qs. Yeah, first couple minutes here, trying to trend a little down. Tesla, trying to get its bounce there, roughly that 197 level. And it doesn't seem like things should be so aggressively negative today. I mean, I know there'll be some risk-offness with data coming up, but boy, look at that volatility. Can't tell yet what direction you're going to go with barcodes like that. Apple's giving up a little. You know what's just not giving up, though, is NVIDIA right now. It's really trying to go for it. IWM just went back to positive. Oh, wow. Palantir just popped up. Nice pop on Palantir. 2.8 now. My Who Wants to Be a Millionaire is still trying to play. I love that show. And NVIDIA is almost at 3% now. There you go. Which way is everything going to go? Going for the test on NVIDIA. Let's see. This is the 108.08 line. It's a pretty big one. Tesla now recovering, only down about 3/4. PayPal down about 37 bips, big deal. Palantir's crushing it right now, 2.9. Wow, almost 31. That's really impressive. I mean, it crushed through that. Usually that 29.29 has historically been a serious lid for Palantir, but boy, it's now ripping away after having broken that. And it's been fighting that resistance level for quite a while. BTC continuing to trend down. Here goes NVIDIA. 3%. Right at the line. Can it hold? Can it hold? I don't know. I don't know, me lord. I cannot know. Well, it'll fight that line. Let's listen in to Jimbo for a moment.
Formulation comes and you have more people on them and it's covered by insurance, broadly speaking, and even Medicare. Does that change?
I think that has to, because there's just too much evidence that it only will. But you have an outfit like ConAgra, which is recommended by Goldman. I mentioned that. They have a portfolio that includes Slim Jims, that includes protein. And what's really necessary, as you know, is that you have to have more protein. And they claimed on Mad Money, look, we've got the best snack and protein portfolio. And Goldman bought that one. And,
right. As we've discussed, you lose a lot of weight, but you do also lose muscle mass.
But you also said no one goes out.
Concerning for older.
This is very interesting. Apple and Nvidia are just pushing right now. Nvidia's pushing through. Apple's pushing through. Both of them pushing through their lines on an uptrend here. But Tesla pushing for the downtrend instead. And so you've got a little bit of, this is one of the reasons you've got this mixed bag over here on the Qs. You really have a tale of two cities almost going on here. Let's see if it can hold on to that breakout there on Nvidia. Even Apple questioning that breakout. Enphase, wow. Turns green. Was just red. All right, let's see. What about Doomers? They're talking because listen to Jimbo and them talking about a loss of muscle mass over something. I don't know. We're gonna go over here and listen to something else.
Wild swings, the likes of which we've seen over the last few weeks when these little data points come in. And do you hedge against that?
Hey, Matt, yeah, that's an excellent point. Actually, when we look at the data right now, the options market saying that we could see plus minus 1% swings based on inflation data this week. But we don't actually make such short-term calls. Our time frame is typically 6 to 12 months. So this is really in the realm of things noise at this point.
Well, if you think about the noise that we have been seeing as well, some of this has actually nothing to do with the macro at all. Of course, we're watching a calm market headed into this week, but you still have the reverberations in the minds of investors from what we saw a week ago with the unwinding of the carry trade. To the extent that there's more positioning noise under the surface, how concerned are you?
Sonali, that's an excellent point. I think this started as a positioning event, and you saw that in the end, fundamentals dominated, right? So we had the positioning unwind of the carry trade. We had some sort of, I would say, broadening in the U.S. equity markets also, where positioning's been so concentrated in the tech sector. And to me, all of that, Sonali, is great news. I'm looking for this broadening to happen, looking for positioning to flow towards other areas of the market where earnings are actually coming in quite strong. So there are obviously these periods of transition where folks move away from this narrative of inflation to now maybe broadening growth. And something to watch for, but these are opportunities to actually adjust your portfolios to where you want them to be.
Are you concerned at all about, earnings coming down? We're looking at, 11 or 12% for Q2. I think analysts are pretty bullish in terms of the full year, 9, 10, 11% for earnings growth. Does that still track?
Absolutely, Matt. In fact, when we started the quarter, I think expectations in the market were somewhere around 9%. And we are seeing, as you mentioned, closer to 11% in earnings this quarter, I'm sorry. And our expectations for 12 months ahead is around 12% also. But as I said earlier, I think the most heartening thing for me is that earnings are broadening. They're not concentrated in one or two sectors. And that, I think, is great news.
And Witty, thanks so much for joining us. And Witty Bahugana there of Northern Trust talking to us about her expectations for stocks and the economy in a sense. I mean, it's interesting. We got almost a growth scare a couple of weeks ago with the non-farm payrolls number, and I realized there were positioning issues that helped to drive the market down on Monday, but we clawed back almost all of last week's gains after the unemployment claims number came out better than expected, and people seem pretty...
Check this out. I'm just watching Monday.com. It was up like 11% and just vomits. So I don't know what happened here, but now it's up about 7 right now. But this one vomited. Nvidia's starting to lose that 108.08 line. The Qs are literally falling into potentially red here. I mean, we went from like up 0.5% to now up, 14 basis points. And I keep seeing these red candles here. Apple got rejected at its 217. These were having fun, Apple, Nvidia at their lines, but Apple just lost it, and Nvidia is getting ready to lose it. So I don't know how sustainable this will be. This sort of loss. Who knows? They could just turn around, and pop back up, right? But Tesla's going back to test the 197. Remember, I like to use BTC as sort of an omen. It's not a guarantee, so like you have to sort of evaluate yourself what you think it's going to tell you today. It's like looking into your crystal ball. But, the observation is clear here on BTC. We rejected 60K roughly 3 times and got a bit of a trend down here at the moment. So that could just be a sign of nervousness this week, which totally would make sense. Absolutely makes sense for markets to be a little nervous about all of the crazy data, all the data that's coming out this week. But who knows? You could get a great PPI tomorrow. Everything skyrockets again. You get a great CPI, skyrockets more. Get great retail sales, skyrockets even more. Iran doesn't end up attacking Israel, skyrockets even more. And then all of a sudden, the dip is gone. So, who knows? Then the only thing you really have left is JPOW and the election. So you kind of have to evaluate that. But this is it's a little interesting here. The Qs are getting close to 0. JetBlue 1231 to the downside. Dang! Should have kept my shorts. I am wearing shorts. And then again, I pretty much always wear shorts. Apple's trying to bounce a little bit. Okay, Monday.com came right back. So I'm not really sure what was going on over there with Monday.com. Nvidia really slow moving over here. Really getting stuck in the mud right around that 108.08. Small caps are negative. Tesla obviously down about 1.2. Qs at the moment still green, but small caps getting smoked. They've really, I mean, you had a bounce here at 199, but people wonder, was that more of a dead cat bounce, and are you potentially trending towards another gap down to 181 on the Qs? It's going to be your not the Qs, your Russell 2000 small caps. Okay, the Qs did just lose the lead.
Lost the lead.
That's really surprising. Now, this could just be like the, typical intraday craziness that you see, and then you end up bouncing into the rest of the week or something. Who knows? But down about 7 bips now over here. Yeah, Nvidia's given up as well. Palantir had a fantastic run. If anything, it's actually holding on a little bit there. Bitcoin just dropped below 59. AMD just went negative. Facebook went negative. ELF down another 4.5%. Disney's down again. Trade Desk lost 100. Dell Technologies is still up fractionally here. Rivian's down 3%. All right, Rivian's getting whacked. Yeah, Tesla. Look at Tesla right on that line. If you don't have that line drawn, consider drawing it. It's not these lines aren't guarantees, obviously. You kind of have to play with them yourself. But 197.20, I just observe frequent supports and resistance moves at that level. Monday.com again giving up on some of those moves. Apple's really trying to stay green here, but the Qs gave up. And Nvidia, yeah, right there, 108.08, same frickin' spot. Again, who knows? Maybe it's just a little bit of intraday madness, and it'll all just come rallying back in a moment. We've seen that happen before. Okay, let's now listen to CNBC.
Oh, tonight. Oh, my, the Olympics of the right.
Yes, Elon Musk is going to have
one letter X.
President Trump and obviously Republican nominee for President Trump as his guest.
Well, that could be a very
X.
exciting thing. I'm going to listen to that. I don't know. while I'm doing work. I got a speech I got to give Wednesday for the investing club. I'll put that on in the background. Is that possible to have that in the background? Look at that.
Could be fascinating.
Could be.
Or not.
Well,
5
David,
p.m.
you interviewed Musk.
A long time ago.
I'll cover it.
It was. But Donald is not interviewing Elon, I don't believe.
Right. Well, no. That will be interesting. I don't know. I mean, because it's one of the things about President Trump is if you think you have an idea what he's going to say, then you've got the edge on his advisors.
You never know where things are going to go.
What advisors?
Vice President Harris did come out over the weekend and say that she would want the Fed to remain independent.
Yeah. Well, she did not say, I made a lot of money, and therefore I can tell the Fed what to do.
No.
Which there are a lot of people who made a lot of money. I mean, like, hey, in that sense, like maybe Jonathan Gray should run for president.
John Gray.
He made a lot of money. Are you interviewing him?
No, he's the president
No,
of Blackstone.
Yeah. I thought that you had the interview with
Well,
did I do that? I shouldn't have said this.
Ixnay with the tink tape.
I'm sorry.
Okay. Boring. Jeez. Come on,
Disney.
folks.
It turns out the happiest place on earth has a dark side. The company is revealing a number of new theme park attractions, including the first devoted to movie villains. Joining us for more is the co-host of Bloomberg Technology, Ed Ludlow. And you think about just kind of the state that the theme parks have been in lately, the crunch on the consumer. How much can the villains draw people out to play?
Shout out whoever cut that villain montage. That's OG, some of those. I mean,
Upstart just vomited like 4%.
Disney gave us
Reddit's down 3.
$60 billion of capital investment over a decade. But the villain-specific theme park resonates with all of us. It must resonate with Matt Miller. It's going to be at Magic Kingdom in Florida. It's going to be equal in scale to that of the Star Wars theme land, which I've been to in Southern California. But again, for investors, it's kind of a patience thing because construction on those projects won't start for another 5 years or so. And even though it's a big spend, they do take time to get people through the gate. And as you guys...
5 years, jeez. That's crazy.
As reflected in Disney's theme parks miss last quarter.
The kids today, Ed, would probably think of Hans of the Southern Isles, the bad guy in Frozen, as a villain. But
or
the
like
greatest
Te-Kā from Moana, something like that.
Exactly. The greatest villain of all time would have to be Darth Vader. Is he going to be at this park too?
Controversial of all time because Darth Vader of Star Wars now owned by Disney through acquisition of Lucas. But when I think Disney villain, I don't think about the Star Wars or Marvel universes. So that's an interesting spanner in the works. They're doing a lot of other stuff as well, right? Like they're going to have a Cars-themed park of significant scale and attraction in the same Magic Kingdom position in Florida. And I don't know if you guys saw, but they're also going pretty deep into the cruise industry with the expansion of what was already ambitious plans for additional vessels, particularly, maybe in markets like Southeast Asia, because there's demand there. But just remember that in the moment, we are worried about underperformance of this unit because it underperformed at a time where streaming in particular did quite well last quarter. But parks and cruises and attractions has been the profit driver historically.
It's interesting.
Is it a buy the dip opportunity on Disney yet? What does everybody think? I know the valuation has certainly collapsed at Disney.
Competing with land attractions. Disney has some of the ultimate land attractions. Do investors have patience for not only their expansion, but also the cruise ships?
They're going to have to because...
Also, BTC is like, I don't know what's going on, falling off a cliff right now.
2027 to 2031 is when they kind of materialize in the oceans. But you raise a really interesting point. I hear it all the time on Bloomberg Technology. A competition for wallets and a competition for eyeballs is multi-medium. You are trying to get consumers to spend money at a budget in a specific place. And, one thing that Disney said, it kind of ties across theme parks and their cruise line ambitions, is that they're very good at being strategic, discounting for those demographics that are responsive to incentives and discounts, placing their bets in specific markets, vis-a-vis Western Europe or North America, et cetera. So it's a long payoff. But the stock's down like 0.6% right now. It's nothing for the here and now.
Ed, thanks very much. Bloomberg's Ed Ludlow there is the anchor of Bloomberg Tech. You can catch him at 11 a.m. in a show that you
says Disney's DEI policy is killing the stock. Somebody else says no. Somebody says Disney dead money. Somebody says Disney destroyed Star Wars. Really? I thought their Star Wars theme park at least was pretty incredible. The one in California. It's pretty awesome. Yeah, some of those rides are amazing. But, the company's obviously more than just rides, right? Somebody says, Disney is garbage. Need the company to collapse. Somebody says, yes, I bought some Disney. Somebody says, I think you should buy shares of Disney. Steven says, I just bought some Disney. Emilio says, yes. Humbler Hiker says, no. Okay. It's like a fitty here, huh? Fitty. All right.
Because, of course, we're turning deeper into red territory on those indexes.
It's already recovering, you fart. Look at this. Q's already bouncing back right now. Nice bounce there on the Q's. Does that mean Bitcoin's finally bouncing? Finally. Look at that. Second candle of green here after, dropping off a cliff. Reddit dropped off a little bit. Nvidia's trying to get back to the line now. Tesla's above the line. Q's trying to come back, so maybe it was just a early morning kind of sell-off or whatever. I don't know. You've got apps is down. Tesla is technically down 1% here, but it's trying to recover. Nvidia's trying to get back to its line. This is the 108.08 line. Pretty big one. And the Q's only down 8%, 8 basis points now. We went down as much as 30 for a very, very brief moment there. Everything decided to sell off. And Q's right back. Not uncommon. Get that morning volatility right off the open. But, it certainly is getting hard to find a trend for the day. Looks like Enphase is trying to go up, and just like Palantir is or was, but getting a little bit of a rejection now. And then BTC is trying to climb its way up. Yeah, having a little hard time there on the Qs, keeping it up. Come on, baby, light my fire. All right. What else? What else do we have? I don't know. Everyone's on commercial again. It's freaking classic. All right. Every single one of them on commercial again. Losers. All right. What else? Q's. Oh, yeah, I'm back to about 21 Bippa dudes down there. Tesla. Ooh, Tesla just gave up on that uptrend real fast. Apple getting rejected again. Q's. A little bit of a rotation down. What do we got over here?
On the lawsuit front, right, I mean, these legal proceedings, they take a long time, so we could be waiting. But I have to say, more concerning, this exposes the challenges that Intel has been facing over, the past year or so. Now, the suit argues that they fraudulently concealed that struggle, and over the past 6 months, they then dropped various bombshells, which caused the stock to plummet, even losing over $32 billion in one day. Now, the suit claims this, quote, despite knowing or recklessly disregarding these adverse developments, defendants made materially false and misleading statements regarding Intel's manufacturing capabilities and the trajectory of its foundry segment, which caused Intel stock to trade at artificially inflated prices. Now, the company is attempting to right the ship. They've announced $10 billion in cost savings by 2025, including firing 15% of their employees. but investor confidence, I mean, it really is at an all-time low. The stock is down close to 60% this year. Analysts are saying this is an existential crisis for the company as they attempt to find their way back into this AI chip race. To make matters worse, there are reports surfacing the company had the chance to take a 30% stake in OpenAI. The CEO at the time didn't think that apps like ChatGPT had any commercial value. I will note they are looking to make up ground against their competitors like NVIDIA by investing in new U.S. manufacturing facilities. They were even set to receive $8.5 billion from the Biden administration under the CHIPS Act. It's certainly, though, going to be an uphill battle from here.
I wonder if it's worth buying the dip. $19 a share is a dip. And we'll see. Kelly, thanks very much indeed. At the top of the show, I said, look, this is not a kind of white knuckle Monday like last week's white knuckle Monday. Well, maybe it's moving in that direction. We have the Dow now down 200 points. You're at 39,293. The 10-year Treasury yield, that has been moving up this morning, only a fraction. It's at 394. The price of gold close to record highs, 24.95 right now. That's awfully close to $2,500 an ounce. Bitcoin 58.4. Oil rising because of the tension in the Mideast, $78 a barrel. Nat gas, not much change, $2.20. The average price for a gallon of regular, $3.44. California, watch out, sports fans, it's $4.60. All right, take a look at Dow winners after 24 minutes worth of business. United Health, Apple, Chevron, Walmart, Nike, all up. The S&P 500 winners, topped by KeyCorp, Comerica, Supermicro, Starbucks. Nvidia's on that list at 107. NASDAQ winners, topped by Starbucks, Take-Two Interactive, Pinduoduo, Fortinet, and AstraZeneca. Still ahead, KT McFarland will discuss the U.S. offering amnesty to Venezuela's Maduro if he gives up power. A Kamala Harris supporter called teaching the greatest instrument of social justice in this country. Carol Markovits responds to that. The Trump campaign says internal communications were hacked by foreign sources. Former State Department official Christian Whiten will explain the impact of hacking on the elections. Kamala Harris.
Yeah, a lot of people don't believe it, by the way. I thought that was very interesting. You got a lot of folks that are like, oh, okay, sure you were hacked, Trump, and it was all just public information they got, eh? No juice. Oh, okay. So there are definitely a lot of folks critical on that hack. I thought that was very interesting. But I mean, I don't dispute there are definitely hackers out there trying to come after politicians. There's no doubt about that, especially Iran. And then of course some argue Russia. Which is not a surprise. Take a look at this, though, folks. Again, on the 108.08 line on the reject. Come on. And then Tesla, I'll tell you, when you lose the 197, if you don't have these lines drawn, I don't know what you're doing. But I would draw these lines. The 197.20, anytime this gets broken, it seems like there's a high occurrence of it going to 195 or with this 194 range. No guarantees, obviously. It's just sort of an observation on the technicals here. Now the question is, where does it go from here? Well, who knows? We'll see. Monday.com, I find this one very interesting. It basically is bleeding out all of its 10% rally here, which is somewhat shocking, a little odd. So yeah, odd. IWM small caps, look at this. You're down almost a whole frickin' percent on the small caps. I don't know, but BTC all morning long has been screaming, no calls today. No, Kevon, you will not buy the call options today. You will not, because the BTC says so. Okay. Look at that. Palantir was up like 4% at one point. It's up 40 basis points right now. What the hell is going on here? Tesla, bouncing on the 195, trying to. You know, what it is it's data nervousness. People are freaking out over major data catalysts this week. Yeah, roller coaster day, you don't say. This kind of looks like the X roller coaster at Six Flags Magic Mountain. They give you like the little juke out drop, and then the juke out drop, and then the 90 degrees. Okay, maybe it's not as perfect, but anyway. Yeah, that one's kind of wild. So, what else? 2.5 on Tesla. That's a lot. See if you can actually hold the 100 SMA on NVIDIA. We'll see. Looks like smalls want to come back to life. A little green candle there on the beats. BT sizzles. All right. Any actual news? Be nice if we can actually get some news out here. I don't know. Let's see if there's actually some news. Let's see. Economic malaise signals more volatility for stocks. Potential for stock market volatility to persist based on an economic model. Major lows in economic momentum have historically coincided with significant troughs in the equity market. Okay. Though no recession has been officially declared, the economic regime model hasn't indicated a healthy U.S. economy for a record time. All right. Whatever. Traders look far from sanguine. So, okay. Some nervousness. Fine. JetBlue begins $2.75 billion debt sale. More debt. More debt. It's the airline. Kevin, why don't you buy into the airlines? Because they have no PP. No pricing power. Although, honestly, pricing power is tough to come by in this environment. Most companies, like, really see their PP shrink. And nobody likes shrinkage. So, but it's just normal as you know, consumers tighten, everything shrinks up. So then the question is, you know, where does the PP growth come back from? You know, what's it going to take to bring growth back? Pricing power. So we shall see. Apple, ooh, can't hold on over there. All right. Yeah, NVIDIA getting stuck a little below that line too. Okay, what else? What else? The Fed is too late to save the housing market this year. Yeah, that's fine. That gives you more time to go buy this year. Not that that's advice, but it's just sort of a broad idea. Really, I mean, so what? The Fed reduces rates 25 bips? That's actually going to matter to the housing market? No. Okay, what about 100 basis points? Not really. You know, we got to get back to zero, baby. Zero. That's what we need. It'll happen. I think we'll go negative. People are going to freak in 10 years when interest rates are negative. Oh my gosh, nobody's spending. Hey, it's Sarah.
With plans to, quote, explore commercial opportunities to partner together in the future. The company's CEO joins us next hour on Money Movers. Qualcomm is lagging today, downgraded to neutral by Wolfe Research, as analysts there say Apple's efforts to produce an in-house modem could finally be coming to fruition, which would cause a major revenue hit for Qualcomm. Shares down more than 3.5%. And then watch Monday.com swinging to a profit in the second quarter and raising its revenue guidance for the year. Stock's been an outperformer on the year. Don't talk about it too much.
No, I don't know what they do. Do you?
Not much, but we'll look it up. It's up 8%.
Wow, it's a 12.
Oh, Qualcomm got cut basically to a neutral level at Wolfe. That's why they're down. Okay. I misunderstood the first part right
He knows every name and what to do with them.
Little recovery right now. Getting a bounce. Here comes a bounce. Let's go.
Because the broader picture is that we will learn a lot of information about the economy this week. And that's what we need after a growth scare, questions about how many Fed cuts there are going to be. So the highlight of the week is going to be Wednesday with CPI. But interestingly, we get PPI before CPI this week, which doesn't always happen. That's the wholesale inflation read. Could be a market mover. Feeds more into the Fed's preferred PCE measure. And then Thursday, retail sales will be an important signal on what the consumer's doing for July. Friday caps off with housing starts. A few more earnings to get to as well.
Got a bounce right now. Bounce in markets. Take a look at this. Q's bouncing. Apple's testing the line. Tesla, like a perfect bounce on 195. Still stuck below 108.08 on NVIDIA. IWM's trying to move up. Bitcoin, it's almost at 57.5. It's almost there. All right.
I mean, first of all, the changes in the Fed funds future, so where the market thinks the Fed is going to go. So now there's a 50-50 odds that they go a double in September to try to make up for going too late because of the weak jobs report. We'll get another jobs report, by the way, before the September meeting in the first week of September for August. So we'll see. And there's now some exuberance that we're going to get more cuts than expected. So are we in a place where we were coming into this year where the market got overly excited about cuts and that wasn't justified? That's why this week is going to be important. Also, Fed Chair Powell is going to speak the following week at Jackson Hole, so he can help give the signal. But CPI, no doubt, very important. I just wanted to point out the Atlanta Fed GDP tracker because we are still tracking for 2.9% growth this quarter. That's not an economy that is necessarily falling into a recession. Now,
keep in mind, those GDP trackers are based on the data that they're getting for July. And we were expecting to see some weakness in July from at least what we got in the earnings reports on July. So now the GDP tracker does not include forecasts, though. So something else to keep in mind, like earnings call forecasts and earnings report forecasts.
2% range.
Got it.
Atlanta Fed always tracks above that and has been, not necessarily exactly accurate, but not off in terms of the GDP. So GDP hasn't been a big problem. Paulo Torsten Slok has been on this thing that the market's too excited about rate cuts and the economy's doing just fine. I took one chart from him over the weekend from Apollo, the weekly credit and debit card spending, just to show that, again, we're not seeing a collapse in the consumer. And this is a consumer-driven economy.
Going to weekly, nice. That's a little different from what we heard with Bank of America this morning. So let's see what data set they're using.
Whether it's Disney parks, which obviously can be expensive, whether it was Airbnb or even Expedia, that things at least seem to be moderating a bit.
And that should be expected, right? They were hot coming out of COVID. There was a ton of pent-up demand. People prioritize. Now we've had a few quarters, years really, to digest high inflation rates, high interest rates, which do have an impact on the consumer. So it would be normal for things to cool off. By the way, that's something I'll be looking for in the CPI report on Wednesday. Hotel prices, because they do factor into shelter and could put downward pressure on that overall number, looking for a 0.2% month-over-month read overall. But then we're also monitoring the turn, right, David? And the Fed needs to be aware of the turn in the economy and get ahead of it. And that's maybe why the market's been throwing.
NASDAQ just went green. Look at that. Look at that. Here comes the rally. NASDAQ goes green. NVIDIA's trying to break 108.08. Apple's trying to break through as well. Here comes the buy the dip. Yep, look at that. BTC also. BTC bottomed about 4 minutes ago. And the Qs bottomed about 5-6 minutes ago. And Tesla bottomed about 5 minutes ago. So the question now is, will it last? But it does look like some of that start to the day selling off has relaxed. Monday coming back up a bit here. You've got NVIDIA now nicely sitting, creating its first candle over that 108.08. Yeah, everything's somewhat moving up at the moment. Tesla, Bitcoin, we'll see if it holds on. Wow, Palantir is about to go negative after a 4% run. It's negative. Oh my gosh.
Lost the lead.
4% run to negative. Holy crap. Wow. That's unexpected. That's pretty remarkable. Ooh. Video keeps going. Let's listen in over here.
Remains bullish on large cap value, dividend payers, and what they call old school CapEx beneficiaries. Bank of America Securities, head of U.S. equity strategy, Savita Subramanian joins us now. And Savita, just on this conversation, do you think the market is too ahead of what the Fed is going to do on the cutting front, and that presents a risk?
I think that there is some impetus here to quell market fears around a little bit of a softening that we're seeing in the economy. And admittedly, our economists have been calling for a deceleration, and we're seeing that now. I think the idea that we're going to see a real hard landing unless the Fed cuts excessively is not necessarily the story. So, I would argue that what we're seeing is a reason
Using that laptop mic there, huh?
slowing. The Fed has controlled inflation. We are now at a point where the Fed can begin to cut rates. And that's actually good news for stocks because we're at a point where, a lot of the more cyclical companies are pricing in a really tough downturn. We've already started to see tech companies really underperform. I think probably the driver there is that hedge funds and mutual fund managers are essentially de-risking their portfolios of some of the leadership that may start to fade. But I do think that we're at a point where you don't necessarily want to sell the market wholesale. You want to pick your spots. And again, as you pointed out, I really like large cap value stocks here. I think that's an area of the market that's underappreciated and is poised to do quite well in the months, if not years to come.
Doesn't large cap value, doesn't any value need an economy that's in growth mode? And there are questions about that right now?
Q's killing it right now. Up solid rally. I mean, you've been rallying now for about coming on 8 minutes. And I mean, you went from like negative 30, 40 basis points to now positive 20. Nice rally right there. Really at the moment being driven by, frankly, NVIDIA. Okay, let's keep going.
Some of the areas of the economy that have been in a recession, like manufacturing, like some of the infrastructure programs that have been a big contributor to economic growth over the last couple of years are starting to come back a little bit. So, when you look at the data, there are cross currents, and there have been cross currents for the last few years. Ever since COVID, we've been in this really disconnected market environment. And I think what we're seeing now is just a slowdown in services, which was to be expected, and potentially a basing trend in goods demand. And we expect that to sort of kick in and drive earnings growth from here, as well as the fact that, and I pointed this out on your show a couple of weeks ago, the old school CapEx idea is really more of a must-do than a nice-to-do, because we're sitting on U.S. infrastructure that is incredibly old, hasn't seen a refurbishment spend cycle in a very, very long time. And meanwhile, we've brought all of this economic activity back from China to the U.S. So I think that there are a lot of drivers for a traditional CapEx cycle and a business investment cycle.
It's an interesting point regarding the government-sponsored, basically, infrastructure spend coming, getting reaccelerated in America. That is very interesting. Okay, so what do we got here? NVIDIA, as you can see, broke out of the 108.08 line. The question now is, will it hold? We'll find out. We'll be watching that. Tesla off the 195, trying to get back to 197.20. Will it be able to break through? The Qs just had about 10 minutes of rally mode. Will that rally mode continue? TBD. Palantir's trying to go back to positive. It's crazy to me that it was up 4% and then it went negative. That's wild. NVIDIA's trying to push green again. BTC, nice recovery over here. Monday.com back to about that 10, 11%. And let's see here. Let's see. Apple, 68. Eccentric here. You must be clueless, man. I am net long the market. That doesn't mean I don't have hedges, but you gotta understand. I've been very transparent. We got net long position, have increased cash, substantially net long. But just because, I have a few hundred K-ish of hedges does not make me net short. So, before you start thinking you're an attorney and you know what's going on, maybe fact check yourself based on what I've been saying. I am bearish. I'm 2.5 on the bear scale, right? But I don't want the economy to go into a recession. It's bad for startups. I think I've said that 3,000 times. People think like I'm praying for a recession because I have hedges. Well, that's stupid, because then I'm burning my net long exposure and my startups. It is worse to go into a recession than it's good for hedges to pay off. So you know, I think sometimes people are a little clueless. Like, yeah, of course, I got some hedges. I've got some, you know, shorts on Tesla and some others, you know, index and otherwise. But again, they're hedges. So you know, sometimes I think people think, oh, why is Kevin happy if he's shorting? Because you're a dumbass. Because I'm net long, you dummy, and I've said it for a long time. But again, you know, people want to have these opinions and create impressions and leave comments to make it, you know, seem like there's some conspiracy going on or whatever. It's like, Jesus, people. Anyway, okay, so Doomers are on commercial. We've got pretty much everyone's on commercial. Okay. Let's see here. We do have this recovery continuing here. Wow, this is pretty impressive. NVIDIA right now up 4.8. And 110 might be a psychological barrier, though I do not have any lines there. And Bitcoin continues to bounce back really nicely. Really nice there on Bitcoin. Bitcoin was really leading the way down, right? Oops, hit the little news button there. Bitcoin was leading the way down, and now it seems to be leading the way up. Yeah, look at that here. Very, very nice. The Q's up about 30 basis points. This has been a straight up rocket ship for about the last 15 minutes. You're almost up 5% on NVIDIA now. Holy smokes. Then you've got Tesla. Not moving as aggressively, though Apple did also break out of the line over here. Then what else do we have? Upstart's down about 3. Enphase holding on to about 0.5% over here. Let's see here. Affirm's down. Disney's still down. Okay. So somebody says NVIDIA 111 fib level. I don't have a fib level at 111. Maybe some folks do. Anyway, it's what you're really in right now is you're in like a recovery off of this morning sell-off. Look at that on the Qs. You've almost completely recovered on it. You're right there where we were at the open, basically right back to the open here. Somebody's saying SMCI. Oh, I bet that's moving nicely if NVIDIA is moving like that. Oh, wow. Look at Super Microcomputer. Momentuming up 7%. Holy smokes. And, yeah, the Qs keep going here. That nervousness was fleeting in the market. Wow. And Apple's almost up 1% now. How's gold doing? Somebody wants to know. Let's take a look at it. Yeah, and I want to see how yields are doing, too. And then we're going to go make some more coffee and head on over to Course Live. No, yields are basically flat. Oil's up 1 and a bit. Gold's up 72 bips. Yeah, Bitcoin's obviously down a little bit. But, wow, what a little rally mode has started there, huh? Tesla's stuck. They're really stuck. Wow, how does Palantir just go down 1%? It's going right back to the 29.29 line, potentially here. I mean, that's just the trend that it seems to be following right now. I don't know. So we'll see. But we'll see. I'm sure we'll get some ups and downs in the market. Usually you don't just get a straight line up. Not at this slope. You can, throughout the day, have sort of a gradual slope up, but usually these sort of things sell off. So we'll see what happens. Slowing down a little bit on that acceleration there on BTC, and IWM beginning to rotate down. So let's take a look at some of the questions that people have here. Palantir dipping, market up. Yep, double whammy. Both Microsoft and Palantir. Oh, is Microsoft going down too? Head and shoulders, says Tommy. Let's see here. I do actually see your X comments, James. There are just very few of them. JetBlue must have been in the pool. They got that's a good one. Yeah, answered that question. Let's see here. Lockheed off the charts. It might be based off what people are seeing with this potential with Israel, eh? Israel and Iran. It's gonna be wild. Check out Humana, or what's Huma? I don't know what Huma is. But anyway, woo, Nvidia really holding on there and getting hot in the kitchen. So then, yeah, right there where we basically opened is where the Qs are stalling a little bit. Tesla's stalling as well. No, Nvidia wants to keep going. Wow, look at that. Okay, good. So, still going on the Q or on Bitcoin, by the way. All right, we're going to go ahead and push the button, make another coffee, and we're going to get to the course member live stream. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Well, there you have it. Thank you so much for being here. We will see you on the next one.